Hey, this is Don Rasmussen, managing partner here at Quartermaster Tax Management, and I have the privilege of having Mr. Jason Molnar, our head tax attorney. Jason, welcome.
Thank you.
And so here's a big issue. Section 174, it really has impacted the R&D process. It doesn't impact research and development credits. It's how we're able to recognize the expenses. Can you kind of talk a little bit about that, Jason?
Yeah, and the best way I can describe it is to talk about a small business. It's very close to me, a software company that I and a couple other partners have been slowly building out to assist in the calculation of R&D tax credits. To use some easy round numbers, we spent, let's just say, about $10,000 a month last year. So the $120,000 of expenses. We had about $30,000 of income as it just launched in November. And so we, lost $90,000. Easy math. 120,000 minus 30,000 is $90,000. Then everyone would think, pre 174, well, you lost $90,000. You don't owe any taxes. And it turns out that's no longer the case, because that $120,000 is a software development expense. It's qualified R&D. And as a result, we can only deduct $12,000 of the $120,000, and the rest of it is carried forward for a period of 5 years. It's a 5-year capitalization amortization, but the first year uses a rule where you only get to take 10%. Then you get 20, 20, 20, 20, and then the final 10. This is very unfair, to be perfectly frank, the way that this is operating. Now, this came about 5 years ago. With a TCJA that was passed by the Trump and Republican Congress. They put a 5-year time limit. They said, okay, in 5 years, Congress is going to have to come back and revisit this so that you can immediately expense R&D expenses. And the 5 years passed, and come December, as unfortunately people are aware, Republicans and Democrats could not come together and make a fix to this. And so now it has not been fixed, and we do not any longer have expensing of R&D expenses, and we're stuck in this situation. So what advice can we give to companies that we work with? And that's that we are aware that there's a Senate bill out there to correct it. We're aware that there's a lot of support in the House to correct it. And our expectation is that hopefully at some point before October 15th, the extended due date for filers, that there will be a correction coming through to this rule. So, and it should ideally be made to be retroactive. The Senate bill currently does both of those things. It corrects it, it makes it retroactive, it makes it permanent, so we're not going to have to deal with this in 5 years again. And it also makes a larger R&D credit. So a lot of benefits potentially if that Senate bill ends up being the one that does pass. But right now, our advice to our clients is extend your return. You can still file on time if you want, but if you extend your return, that gives us a chance to file what's called a superseding return before October 15th. If this gets corrected, then we don't have to file any amended returns, and superseding returns have a tendency to be paid if you're making a claim for refund much, much faster than an amended return. So it's the best process.
I appreciate you doing a deep dive on that. No, that's perfect, actually. So, like you said, we are encouraging all of our clients to do an extension that way that we can do that superseding return. But, you and I had the privilege of actually being on a Zoom call with one of our congressmen, a great friend of mine, Nathaniel Moran from Texas. Yeah. And, it was encouraging, Jason, you and I, when we first got on there, that this has been a topic in the House.
Yes.
That they were just talking about those 2 or 3 days prior to our call with Nathaniel. So, that is encouraging. Of course, as you mentioned, there's a bill in the Senate that makes it very, very strong. It's bipartisan support. So our hope and our prayer is, and of course, I'm going to encourage everyone who's watching this to make sure you contact your congressman, contact your senators, let them know that it is hurting you as a business owner for this to be the case, because it impacts. I mean, I think I told you, one of my clients referred a buddy of his over to me, who does software for 911 centers. And so he was telling me, he said, listen, I had a $150,000 loss this year in operations. He said, but my CPA just let me know that I'm gonna have to pay taxes on $900,000. It's gonna cost me $300,000 in taxes. He said, I don't have $300,000. He says, and so the reality is it's going to put me out of business if there's not a solution to this here. So, how quickly Congress can get this together. I was told, I think you and I had this conversation at the beginning of this year, that when this did not pass, all these big S&P 500 companies, about 450 of them, they were planning for this to get passed. Their expectation was, all these accountants for these big companies was that this was going to be fixed. And the reality is, bipartisan bickering got into play there, and special needs and special interests and all this type of stuff. So, I'm sure you could probably speak to that as well, but it really, not just, the big corporations were harmed, but the small business owners are being harmed, like yourself, with the software company and the one I just referred to. So, I want to encourage everybody who's watching this here, contact your senator. I'm not a political type person, but I'm going to tell you something. When I see my clients being harmed by legislation that could have been fixed just a few months ago, it frustrates me. And matter of fact, it irritates the fire out of me. And I would encourage you to contact your senator and your congressman and tell them, listen, this is hurting my business. I want you to do everything you can to get this fixed. And if they want someone to contact, have them contact us. But anything else you want to say about Section 174 as far as encouraging folks?
No, I do like what you said, though. It affects businesses both big and small. And especially for those larger businesses that have the option to potentially move R&D overseas to another country, what have you. This could affect American jobs as well, because you are now disincentivized to invest in R&D. And that's really bad news, I think, for the future of any country. So
no, absolutely.
Really,
and in our conversation at lunch today, we were talking about how it's really impeding businesses from investing. And of course, chiropractors and in your software company, you don't have Chinese exposure, but there's a lot of corporations that do, and not just Chinese, but other countries around the world who do invest into their R&D. And really, they're going to disincentivize companies from doing so, which is, we're in a potential recessionary situation right now. We got high interest rates. There's so much going on already economically. This is just kind of putting fuel on the fire.
It doesn't.
For the small business owner, for sure.
It doesn't.
Yeah. Thank you again, Jason. I appreciate it, my friend.